For a long time now, the enterprise software cohort has just been a house of pain because Wall Street's terrified they're going to be steamrolled by generative AI platforms that are very good at writing code. But we really haven't seen all that much impact in the actual numbers for these companies. Instead, the enterprise stocks, they've been pummeled by multiple compression. The earnings themselves have been fine, though. Just take a look at ServiceNow. Here's a stock that peaked exactly 1 year ago. It's now down over 45% since then. But tonight, ServiceNow reported what I thought was a pretty darn good quarter. And even better, they announced a $5 billion buyback, including a $2 billion accelerated repurchase, starts right away. Clearly, management thinks the stock is cheap. But will the marketplace, which has become a very cruel taskmaster for software as a service enterprise software, agree? Who's right? Earlier, we got a chance to speak with Bill McDermott. Take a look. Mr. McDermott, welcome back to Mad Money.
Jim, it's great to be with you as always. How you doing?
I am doing well, thanks, and it looks like you are too. You beat on every key line. I want to start with these numbers that you turned in tonight because I've got to say they look very strong overall. I'd like to know how it's happening. What are you doing?
Jim, you know, this is the fastest company in enterprise software to ever hit $1 billion, $5 billion, $10 billion, and now $15 billion plus organically. We have a once-in-a-generation platform. We closed the year exceeding Q4 expectations in full year, and we're operating at the rule of 55, meaning we're growing revenue more than 20% and free cash flow margin more than 35, and we actually upped that to the rule of 57 company this year. And basically, you know, we're in an agentic AI universe, and companies today want a platform where they can fundamentally reinvent their business model. That platform has to work with the language models, the hyperscalers, the data lakes, and all the systems of record to compose a masterpiece. And we put that together, and we're winning.
All right, so Bill, I hear you. I now have to address the stock. You know I'm a stock guy. You are an enterprise software guy. Stock down 100 points from its high. Highly unusual. People are telling me this is because that AI, so-called AI, is eating software, or the customers can build their own software now. I know I've been building software with Anthropic, and that's hurting your business.
Yeah, that is, again, not true. Okay. And I'm very excited to tell you that not only is that thesis not in line with reality, but the contrary opinion is actually where the market is. Today, we announced a partnership with Anthropic, and I think Dario at Anthropic said it best, so I'll just quote him. There's a meaningful difference between giving enterprises access to an AI model and building that model into workflows where real decisions are made. So we already have partnerships with OpenAI and Anthropic, and again, if you remember, Jim, the world was going to change when there were hyperscalers and software companies going to disappear, and now it's the language models. Actually, we're harmonious with the language models. It's synchronous with business process reinvention, and we're leading the way. What I do see is I see feature companies and perhaps some functional companies actually being eaten by AI because we're becoming the great consolidator, meaning that these features and function companies are actually being consolidated into ServiceNow as we connect all of the workflow and the data fabric of these great companies so they can improve their return on invested capital. AI doesn't pay off by infrastructure alone. You got to connect it to business applications where companies can get the value. That's what we're playing.
Okay, so if that's the case and you offer so much, is it possible that people might say there are fewer seats being used, that literally enterprises to operate with fewer employees, Amazon laid off 16,000 employees today, that you can't do as much business because there are fewer seats at the enterprises you sell into?
Great question, Jim. We're actually increasing the monthly active users at ServiceNow 25% year over year. And there's still 1.3 billion seats in our target market, so we barely scratched the surface. Having said that, we have a hybrid pricing model where it's based on seats and consumption. And so we'll meet the customer wherever they want us to. But right now, we're expanding across east to west, across all business functions with the platform. and customers are consuming the apps in every department. And we're also kicking in customers now purchasing additional Assist AI packs as they run through the tokens in their original licensing agreement. So you're seeing now new vectors of revenue kicking in, which is why, not only why we beat the consensus and overachieved all of our objectives last year, but it's why I actually raised the guidance way beyond analyst expectations this year. And I want to make a point to the shareholders, because you're absolutely right. We got lumped in with a cadre of companies that have been sort of functional or feature companies, and that has re-rated the multiple. That's the only thing that happened to ServiceNow. And the second thing that happened is we tucked in a few M&A moves, and I think they were saying, hey, are they buying growth like they've seen so many times before? We proved that we weren't buying growth. We knocked that out of the park. And just to make it very clear, we don't live in the neighborhood where others live. We are one of one in the enterprise. It's the only platform that can reinvent business processes on the fly using AI and all the tools that customers are deserving of. And just to show the shareholders some love, I approved a $5 billion share repurchase and an immediate deployment of $2 billion of that today. So as soon as we can, and the window opens in the next couple of days for us, we'll be in at $2 billion. I also bet my personal comp all on the stock. So I couldn't possibly be more confident of where ServiceNow's entry point is now, how I expect the multiple to re-rate based on results that are one of one. Let's go.
All right, I want to be sure people understand that's an accelerated share repurchase on the $2 billion, meaning it's just going to happen now. So people who really do not like ServiceNow, they can sell it right into you if they want to.
They could do whatever they want, but if I was them, I'd hold. And if for the people that are on the sidelines waiting for the story, Jim, let me explain just a little bit on these M&A moves. I proved beyond a shadow of a doubt we didn't buy growth, okay?
Absolutely.
Knock that one down. I just told you our seats are actually increasing, not decreasing. And our TAM went from 90 to 600 billion since 2019, since I've been CEO. And I just re-upped for 2030, just saying that I have enormous faith and conviction in this business. But I also did some important tuck-ins. And you say, Bill, you asked me the last time we talked, why did you do that? Because you're a builder. Well, what happened was we waited some time to get MoveWorks in as it went through the process. And now we have an agentic AI user experience, that open door where you can search, get your requests met from any data source, and have a great experience, and all the actions are taken on ServiceNow. And then we went into two very critical areas for the customer. One of them, which is super important, is security.
Okay.
Jim, cybercrime is forecast to cost the world $1 trillion a month. So if that was an economy, it would be third, only behind U.S. and China.
Okay.
Huge problem. So what do customers need? They need visibility and prioritization. They have to reduce their exposure before incidents happen.
Okay.
Real-time, agentless discovery and classification of every asset. IT, OT, medical devices, industrial controllers, the whole 9 yards. Armis does that.
Okay.
So that's added to our great security business that's already growing 100% year over year.
We are going to have to move on, but I think we made all the points. I really want to know what the Bears say now. You know what I mean? Let's see what they say now.
You know what I want to... What can they say? I mean, what they can say is, let's re-rate the multiple because they're living in their own neighborhood.
I get that. All right, look, I want to thank Bill McDermott, Chairman, CEO of ServiceNow, and a great advocate for his shareholders. That's what you must understand, his shareholders. And Mad Money's back after the break. Thank you, Bill.
Jim.
Coming up, with Levi's on the move after reporting earnings today, Cramer sitting down with the CEO to find out whether the brand will be stretching its legs in 2026. Next.